gold, silver, physical in your hands, now you got real money. And who's going to question you about that? Because it's invisible.
Gold and silver have endured all the turmoil and chaos of history. They outlived humanity itself. The smartest people in history have always had them, sometimes more, sometimes less, but the rich had them. Virtually all financial advisors and financial planners recite the word diversification in their sleep and in almost every meeting with their clients. Gold and silver belong to a diversified portfolio. In today's video, we will tell you what Lynette Zang has to say on how gold and silver can make anyone wealthy. But before we get into the video, make sure you subscribe to our channel and press that bell icon to never miss an update. So much of what we see happening in equities in the bond market with so much level of volatility, we feel like we are already in the storm. The currency bridge oscillates from one side to the other, and then at some point, there will be a factor that will allow or favor the collapse of the entire system. If, say, the digital currency is set up to appear to maintain value better than the other currency, then the people would think that this is safer, and they will give us everything we need to make us dependent or at least comfortable and confident in this new system. Central bank digital currency is programmable money, and they track every single penny of income. That digital currencies are really good because then that they can do lifetime taxes. They can also pull our taxes out of every single day or every single time a paycheck hits. Most people don't realize that inflation is essentially a negative interest rate. For some reason, if people received a negative interest rate on their bank account, they would go crazy. They would completely lose their minds. But yet right now, according to the government, they're paying a negative 8.3% interest rate because of consumer price inflation, and they don't connect those dots. But somehow, they have an interest rate refusal coming straight out of our account that your balance was actually going down. Then that makes it obvious to them. Once we deposit it, we lend it to them. And that money is debt-based anyway. So it's not really our money. That's why gold, silver makes really physical in our hands. The real money. And who's going to question us about that? Because it's invisible. Most financial professionals exclude gold and silver when talking about diversification. Their diversification is primarily between paper assets such as stocks, bonds, exchange-traded funds, and mutual funds. And the only hard assets they typically include are real estate and personal property. We can carry thousands of dollars with a few gold coins very easily. Silver is precious, but a single amount of it is very heavy and not all that portable. But both can be useful because gold can pay for large trades and silver for smaller ones. Gold is, by and large, a monetary metal and a store of value, and has earned the mainstream financial media well-deserved reputation as a safe haven asset, meaning that when the clouds and storms batter the economy and financial landscape, nimble investors are turning to gold for a measure of safety that many other conventional assets often elude. Gold and silver can only see their supply increase through the difficult and time-consuming task of mining. New gold and silver are added to surface supplies at an annual rate of just 2%. Gold and silver tend to be fantastic and very important inflation hedges in a portfolio when inflation risk increases. As the world population continues to grow, the demand for many things will continue to grow. That's why gold and silver will continue to grow as the demand for both continues to grow. That's all for today. Let us know your views in the comments section below, and don't forget to like this video before leaving. Thanks for watching.